I want to cover a topic after reading some emails, questions, getting a lot from like newer traders, newer to trading futures, prop. And this works for anything. You could be trading cryptos, you could be trading FX, you could be trading futures. And they're asking, like, hey, what's the easiest way to get started in futures prop trading? Like, if you were just going to go start, not using any automation yet or not, fully spooled up on it. You just want to go do something simplistic, some sort of approach to trading. I get asked this, a fair amount, like what would you do or what would the setups be? I like price pattern stuff, so I guess I'll kind of go over that. Let's just take the ES 12th month contract. We're on a grid Renko. That's one of our proprietary or in-house Renkos. We're on a 15 grid Renko. For all of you saying, what are your chart settings? What are your chart settings? That's it. 15 for the grid Renko for the data series setting. This is 7:30 U.S. Central Time, Chicago time, or Globex time. And anyhow, right out of 7:30, typically when I'm running automation, I'll have it come on at 7:32. So if I was in that mode where I'm just going to trade something as simplistic as possible to trade on a prop account, and I'm not fully versed yet or don't feel comfortable yet going into the automated realm, while I'm still learning that, but I want to trade my prop accounts, here's an approach you can consider, and I think it's very effective. So, uh, you know, probably a lot of people in the trading world talk about, hey, what was your favorite book or books in trading? I hardly have any. I've never found any that I thought were worth a darn. Yeah, the Douglas, what's the name? Mark Douglas books on psychology. Yeah, they're pretty good. I'm not going to say it's a bad book. It wasn't kind of, when I read it, wasn't really anything that I didn't really already consider maybe, or, it was kind of like a lot of the stuff covered was kind of obvious, I thought, which is fine. It's still good to say, hey, these are the things you need to be aware of, and here's what you need to be aware of as far as how does your psychology affect you during trading operations. So I get all that. But when it comes to actually, bars on the charts or where the rubber hits the road, I liked Martin Pring books back in the day. They were kind of, he, was did a pretty good job, I thought, of categorizing price patterns and what certain price patterns may mean. Because in the end, we don't really always know what these price patterns mean. Uh, there's different people with order flow that have their conclusions. There's different people that are looking for, bank levels or this or that. In the end, on a day to day basis, who knows what the heck caused a market to stop selling here and go up? I mean, and it really doesn't make any difference. We get a pattern, so price pattern trading, we get a pattern, and then it's time to go see if we can take advantage of it. Here's one of many ways you can use the iGrid tool. So here's the iGrid scalper indicator combined with our grid Renko bar type. You could do the same thing on time-based charts, range bar, tick, and so on. And I have 3 like very important videos in part of our training called how to dial in your iGrid. So how to get your iGrid indicator dialed in, how do you adjust the settings so that the charts and your setups are visually efficient. You can right away see them, and you can right away take the way you have your chart set up, enable you to right away take action on very clear and distinctive things happening on your chart. So I've already babbled for 4 minutes, so I wanted to give a little background. So let's go into patterns. Okay, this is the ES, so this is not the NQ, this is the ES. I look for W and M patterns all the time. So here's a W pattern and green. So W pattern, it's 7:32 in the morning. There's no news that's going on. News would have hit at 7:30. The market held. I have a W pattern, and then I have green. So right here when we go green at that bar close, and I know it's kind of small, I can take action. So I could enter a trade manually. I'm going to get in at a market. You're going to have some slippage, a tick or two, maybe. Well, it's the ES, maybe a tick. and where should your stop go? A really tight stop would be, 4 or 5 ticks below the green, where we transition from green to red in the see the solid line. We call that the trend bias portion of our indicator. That would be like the tightest stop you'd ever want. The max stop you'd ever want is a tick or two below the most recent pivot. So in the end, is this a lot of risk right here? Well, it's a little bit of risk. You can control risk to a point by adjusting your time frame, but you want to be on a time frame. It's more important to be on a time frame where you have effective visualization and you can see your setups more so than, ooh, how much am I worried about the lower the time frame, it means my stop could be tighter. That's actually not as important. It's better to see the pattern, be able to take advantage of it, and you can control how much risk you have by your position sizing. So if you're on a really low time frame, just so you can get your risk as far as distance from entry to stop is your only bias, that's not the best way of thinking about it. It's better to go up to a little bit higher time frame so you can see these things better. They're more clear to you, and then adjust your risk by your position sizing. Okay, so this is your entry. Your entry would be right in this area price, and let's just say you're using, entry fill price plus, actually I'm going to erase that. Let me go back in here. So let's get our entry price all the way to what our risk would be. So I'm going a little bit below that last wick. So that's basically our risk zone, the amount of risk we have on the trade. As the trade runs in our intended direction in this case, at some point we're going to be to the point where about 1-to-1 reward to risk. No problem at all then at that point taking your risk and bleeding it out to break even plus, or just use an ATM function in your NT8 platform in NinjaTrader 8, or if maybe you're on Quantower, you're on Tradevate, whatever sort of a bracket or in-trade management mechanism that you can use to make that easy for you, that's a good idea. So market goes to your 1-to-1 point. That's a threshold. You move your stop to break even plus, however you configure that in your ATM, or you can just do it manually. And then here's some key things from a visualization standpoint to pay attention to while you're in the trade. And I'm long, so am I green over green over green? Yes, I am. Okay, if you're green over green over green, do you have any threat in that trade? Any reason that you need to be like chasing your stop too tight up against price? No. Maybe in the very beginning phase when you're just getting used to this, you want to be a little bit more active. In the end, that's ultimately what you want to get away from. You want to let trades have as much opportunity to run as possible without micromanaging them. So when should you consider getting out of a trade like this? Well, you're in the ES and you got a pretty linear move. You should just be basically doing a backflip that you didn't get into some sort of situation where the ES did this, for 32 minutes. Just kidding. So you got a nice linear move. You got some advancement. Notice too in this first phase, at no point are we getting any candle closes anywhere near into the Heikin-Ashi, smooth Heikin-Ashi part of our indicator, anywhere near the trend bias portion, the solid line. Not till this area do we start getting that transition, and then we get a red. So if you get a red candle, at a minimum, if for some reason you want to stay in the trade, like maybe there's some level just above that, you're so sure the market's going to go up and tag out before it rolls over, then at least when you're getting some red, drive your stop up, lock in 2.5 to 1 or whatever, lock in something so you've at least made a nice chunk on a trade that just gave you a really nice move on your first trade of the day. So, or when you get the red, blip out. That's up to you. You can create your rules there. So that's one price pattern. W pattern with lift and a transition from sell side to buy side. And you can color these colors whatever you want. In the iGrid tools, all the outputs of the tools can be used with Bloodhound Blackbird. The colors can be changed. There's multiple access of adjustability in these tools to make fine tuning and more large adjustments to them. So you can really, the iGrid tools do a really good job of allowing you to trade in a wide range of time frames and bar types and still be able to dial the indicator in to a point that it gives you an efficient setup. So W and M patterns are really, really good. So I don't really see a whole lot of M patterns here, but I'll cover a few real quick. So, the W pattern is the buy side. There's a W pattern. Here's a really nice W there, a very tight knit W. Here's a big W, so a structural move potential might be setting up there. You have some W's on top of W's, and that happens sometimes when the market's cyclically changing directions. So W's. Now here's some M's. Here's an M. Here's an M. And that I won't really. That's kind of an M. It's kind of an M. With the spans between it. Not really. I like the ones that are just up, down, just like a W. Down, up, down, up. So M's and W's leading into rotation, or I should say change in directional price. Okay, so now what are some other patterns then I'd like to attack? So there's an M with rollover. Okay, person could work that setup as a short. What I like better than that one in that case, because the market just took off. It's like right away the market just blasts off right out of 730, and right away you want to challenge it to the sell side. I would be inclined to do that if I just tested or swept some key level and I teach how to track these key levels. If I had a level sweep with an M and a transition, I would like it better. But the market just arbitrarily runs up to some point, stops, and I get an M. I'm not like, oh, I got an M, I'm got to jump into that trade. I do pay attention to where is recent support and resistance. And when a market makes a linear move, the transitions sometimes need something to create the transition. In other words, a level getting tested or swept out. Something like that, I would be more inclined that I would suddenly see a reversal. Now, the other thing we have to consider is we're getting up on the 8:30 U.S. Central Time open. So 8:30 U.S. Central Time, Globex time is right about there. So I don't really want to be shorting that move a minute or two before the open. I'd rather, hey, I put money in my pocket on the long, so now I'm going to sit on my hands and get through the open. That's context, the context of the open. Now I'll show you what I do like with the context. I had an M, I had rollover, lift, rollover. I have a bigger M now. Take a shot at the red. Market moves, stop goes to break even plus into the move. We get a little push down below that pivot. We get a reversal bar. Market starts basically trading up, and at any point you're in green, no sense being in the trade anymore. So the idea is to be willing to let go of trades as soon as you don't see them proving to you, green over green over green, red over red over red. If you lose all three in that color, you don't need to be in the trade anymore. Now, what I did like soon after that, not only am I getting M patterns, I'm getting lower pivot highs and then another setup. So let's talk about that part too.